All right, I'm here live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. We just had a breaking report come out about inflation in the United States, and it is not looking good for crypto. Okay, so we're talking about that in this video today. We're going to look at a lot of other updates that have happened in the space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever you go live. We're going to look at some, the details of the crypto markets. We got the Ethereum merge coming up tomorrow. Okay, we're going to look at the exact time estimate for that. I said before, answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. Let's see. We got technically Kodia, Automatic Beats, Radoslaw, I'm saying that right, Jeff, Stefan, Jay, Kai Taurus, or maybe it's Kentucky Taurus, I'm not sure. Let's see, Pranjal, welcome. All right, so let's go ahead and jump into this. Let's talk about the inflation report that just came out this morning, what this means for crypto, okay? So just sort of setting the stage for this, why are we talking about inflation? Why are we talking about all this stuff that doesn't seem like it's completely related to the crypto space? Well, because one of the major themes of 2022 has been the macroeconomy for pretty much every single asset on the face of the earth, including cryptocurrencies themselves, okay? Because, last November, we sort of saw the top of both the crypto markets and the stock markets, okay? And that had to do with a lot of policy changes with the central bank of the United States. Again, I don't pretend to be a macroeconomics expert by any stretch of the imagination, but everybody's talking about inflation, okay? Seeing costs rise, and we've been keeping the track of inflation all year, to see what's going to happen, because essentially the Fed has been raising interest rates to try to combat inflation. And today we have a report, coming out that basically inflation was hotter than expected. Okay, so we're going to dive through into that, look at some of the details. Of course, you can see that, really just as this came out, crypto basically, most cryptos have started to reclaim all of their gains from the past 24 hours or so, 48 hours even. So a pretty sharp drop, okay? Because if you were getting up today and checking out the crypto markets and saw like, hey, we were starting to go up and things just completely changed course, well, this is basically why. So let's kind of dive into that a little bit. We see the same thing with the stock market as well. So, major stock indices are opening red already today. So I can pull this up here. And crypto is, very highly correlated in the same direction because they're really influenced by common factors. So let's pull this up. So U.S. inflation decelerated in August, but remained higher than what economists had expected. All right, a sign that the U.S. Federal Reserve will stay aggressive in raising rates. So again, like I was talking about before, one of the main reasons we've seen headwinds in the crypto markets is because we have been raising interest rates in the United States, the federal funds rate, which typically has an inverse correlation in the performance in most recent times. Inverse correlation, the performance of riskier assets. Okay, the whole idea behind that is, our economy is largely run on debt for quite some time now. People basically, and also because of cheap debt, basically we have reduced the cost of borrowing money. And so sort of the game theory in that is that you borrow money to make more money if it's cheap. And that's what's been, fueling a lot of the growth in many markets. It's one of the reasons that we've seen such high valuations in the stock market. A lot of that's, of course, getting repriced and those valuations coming down, but also just, growth slowing in general because we don't have access to the same type of cheap debt anymore. And then crypto gets highly correlated with that as well, so on the riskier end of the spectrum. basically when people go risk off, things that are riskier tend to not do as hot. So crypto is no exception. So anyways, the whole idea is trying to measure the progress of inflation to see that it is meaningfully coming down, okay, to hope that we would see a pivot, all right, from the central banks, pivot from the Fed, so that we can start, easing off of the rate hikes and then moving towards a policy of expansion and rather than one of contraction and tightening, okay. So on a month-over-month basis, inflation rose from 0.1% from July, when inflation remained unchanged, okay, which many economists and politicians saw as a huge success, okay. Bitcoin rose 15% over the weekend in anticipation of a positive report, but dropped 4% instantly after the numbers were released. Okay, we got ETH heading ahead of the merge, okay, that's coming up tomorrow. We'll check on that in a minute. But basically, the big numbers people are watching, so this is the CPI report. So it's Consumer Price Index. So it's like a basket of things that consumers pay for. There's core. There's some different measures about how they do it. Okay, they include certain things in one index versus the other. Like core strips out really volatile stuff like gasoline. But again, gasoline is going to be highly affect other prices of goods as well, because pretty much everything gets shipped from one place to another. But it takes out fuel costs, directly. So Tuesday's report was expected to show a much faster slowdown in prices as energy, gasoline, and airfare prices, the main drivers behind high inflation in recent months, started to cool off, but other sectors offset those price decreases and caused overall inflation to remain elevated. Health insurance, for example, rose 24.3% year over year, the largest increase ever. All right, and that's a non-negotiable cost from many people. All right, so health, food at home and rent prices were also one of the main drivers this month, up 13.5% and 15.8%. And services inflation rose above 6%. So the latter is the biggest concern, fueled by acceleration in rental inflation that looks like it's got quite a bit further to go. All right. So, you can look at this report a few ways. The market, of course, is reacting quite negatively to this. The other way to look at this is that we're not seeing this massive increase in inflation. All right, so that in and of itself is across the board, at least, that in and of itself is indicative of some progress, that we're not just completely rampant out of control. But one of the reasons that the market is really treating this like bad news is because it doesn't meet expectations. Okay. And at the end of the day, markets really are about what do you expect to happen versus what actually happens. And even if you're expecting something, that's not that good, but something slightly worse happens, like that price can move in the opposite direction on you. So by the same token, you expect bad and something's just like, kind of neutral, that can be perceived as good, okay, and can be interpreted as bullish, a bullish catalyst for price, at least in the short term, okay. So really, the name of the game is expectations. We did not meet expectations. We underperformed what expectations were, and for that reason, we're seeing prices, go down in the short term. Now, also some of the long term, okay, because again, I don't really try to think too much about short term price action. I'm not really a day trader. I don't really trade short term time movements very often. I do some trading, right, but not most of my crypto. I'm just holding for a significant period of time, okay. So, anyways, what does this mean for the long term, or maybe the midterm even? Well, it looks like really what we hope to happen is some of the aggressive tightening, all right, that we've seen over the past year would slow down to make a more fertile environment for crypto to flourish and establish a new long-term uptrend. Okay, if I had I think how everyone else is interpreting this is that day is not today, okay, and that day is not probably even next month, okay, based on the data that we're seeing right here. So it means that we might have to wait a little bit longer, in order to see that really fertile environment for crypto to flourish, okay. Now, that being said, there could be a path forward, all right, where crypto can still continue to gain legs, okay, despite the environment that we're in. But I do think that it's I do think it stands to reason that, that's going to be hard for crypto to make a, really, really strong move on a big scale, okay, without an accommodative environment. And it looks like we might have to wait a little bit longer for that environment to, flourish. So that's what I'm reading this as. And I think people are reading this as is that the rate hikes aren't working. Okay. That, essentially we've been hiking rates all year and inflation's still not coming down. So like, why are we even doing it in the first place? Can you actually keep inflation under control with these types of techniques? I think there's a lot of doubt. I think there's a lot of worries the Fed's going to overshoot, or that it even already has started to overshoot, and that there's, that we're trying to, fight this with the wrong set of tools. Where did my live stream a minute ago? It just like disappeared on me. All right, there it is. All right, there we go. Let me know what y'all think down in the comment section below. So it said no effect after final. Oh, that's another question. Somebody said, hey, will ETH 2.0 affect the crypto on MetaMask? So let's talk about ETH and the ETH merge, okay? So we have the Ethereum merge coming up most likely tomorrow. All right, so this is Ethereum switching to proof of stake. And this is actually pretty cool. So let's see here. If I Google Ethereum merge on Google, it looks like Google knows about it. Okay, so they have a merge countdown. Okay, so this is actually pretty cool because they give you a countdown timer. All right, based on the difficulty and hash rate. So they've actually plugged in some type of calculation here. Let's see how accurate it is. I mean, they even tell you the merge difficulty, the total terminal difficulty. That's pretty cool. And then they have the little panda meme, and it's got like 2 ETHs on it. I don't know if y'all seen the sort of the panda meme for the merge. Basically, it's it's a white bear and a black bear, and they're gonna merge together and make a panda. So this is supposed to be like the proof of stake, like the Ethereum now, and then the beacon chain, and they merge together, and then they become the panda. I'm not sure why my mouse is messing up on me. I'm trying to move my mouse, and it's like freezing up. So anyways, that's gonna be tomorrow. Basically tomorrow evening. So here's the calculation that I've been going by. So this is total terminal difficulty. It's expected around Thursday, September 15th at 4 a.m. UTC time. But if you're in the United States, or even if you're, at least 4 hours behind UTC time, it'll be on Wednesday. So most likely it's going to be in the evening on Wednesday, which is tomorrow at the time of recording this video. So let's just pull it up here. I'm going to look at date and time, countdown. So anyways, while I'm pulling that up, just a quick recap. What is the Ethereum merge? And this is Ethereum's transition to proof of stake. It's the biggest upgrade in all of Ethereum's history. It's one of the biggest upgrades in all of crypto's history, okay? We've got this thing called the beacon chain, which is set up right now that has stakers on it, all right? And we have miners on ETH right now, and basically mining's getting turned off tomorrow, okay? The 2 chains are going to become one. One of the reasons it's hard to totally predict exactly when it's going to happen is because, the merge does not have like a date scheduled for it. How it works is, like I said, we have mining difficulty right now, and there's going to be a threshold that has to get crossed in order for the mining to turn off. So it's called the total terminal difficulty. It's that number we saw before. And we try to predict when we're going to cross that total terminal difficulty. Based on all types of factors, like the hash rate. Hold on a second here. let's see here. I'm trying to pull up I'm trying to do the calculations here. So, the current prediction for that threshold is going to be on Thursday, September 15th at 4 a.m. UTC. So let's pull that up here, 15th, 4 a.m. So let's see how close Google's predictions are close to Bortles. So Thursday, September 15th at 4 a.m. UTC translates to midnight Eastern time. All right, tomorrow night. 10 p.m., so 11 p.m. Central Time, 10 p.m. Mountain Time, and then 9 p.m. Pacific Time. So I suspect a lot of people watching this live stream are going to be asleep when the merge, unless you want to stay up all night. You know, should we get up in the middle of the night and have a merge live stream? Is that what we should do? So how many somebody said yes. Somebody's yeah. So crazy to hear the merge tomorrow. Been here for 2 years. Are talking about how it's coming soon. yeah, it's been coming soon for a long time. When the Beacon Chain went live, it was like December of 2020, and it was it was like, hey, the merge is going to happen soon. it took a little while. I've seen a lot of yeses in the chat for merge party. We'll see. I have to see how much I want to get on a live stream at midnight. So anyways, some things that are I'm getting ads for Louis Vuitton calfskin sneakers. That's funny. I think I looked up a Louis Vuitton sneaker as a joke one time, and now I get like ads for them. I'm gonna be honest. I don't think I can pull those off. So, anyways, the Ethereum merge tomorrow. It's the biggest update in all of Ethereum's history. No exaggeration. Okay. There's gonna be some final concerns here. Lots of people are worried that basically, that there could be some technical implementation risk with the merge. I mean, there's always risk. Okay, I want to be super clear about that. There's always risk when you're talking about, a big migration like this. That being said, we have rehearsed the merge multiple times on test networks. We've done shadow forks, all that type of stuff. I realize it's not the same thing as doing it on the live chain. Tell you the truth, there will most likely be some weird side effects of the merge. Okay. What I'm betting on, though, is that there's no major showstoppers or no major, deal breakers that would truly compromise the, security of like user funds, especially on major crypto assets like ETH, and therefore the long-term, sort of success or viability or perception of the Ethereum chain itself. That's what I'm betting on. Okay, that's what I'm betting on. It's okay. It's not financial advice. I'm not trying to convince you to make the same bet. So I'm basically holding tight in my current position. So, the Ethereum price, of course, is tanking with everything else right now upon the CPI numbers coming out. Again, so if you just tune in now, that's what we were talking about before. The CPI numbers came out. They look bad for crypto. So this is, I don't think this is totally merge related. Of course, we got some people who are going to be selling pre-merge to sort of try to buy the rumor, sell the fact. We've been saying for quite some time now that this could have been the peak of the merge trade even. What's going to happen to the Ethereum price after the merge? I don't know. You know what I mean? In the short term, probably go down. But again, not financial advice. I'm not trying to trade that price action, but it just would not surprise me if we saw a further dip after the merge, even if it's successful, simply because of the sort of buy the rumor, sell the news mentality for those short-term traders. Now, again, based on the security that I was talking about, you want some people who are going to have a flight to safety, and some people who want to hold Bitcoin instead of ETH around the merge. Okay, so I think we have seen some of that rotation happen already. But it most likely, like if you're trying to prepare for all this stuff and you're super into crypto, like you've probably already done this, like unless you're just seriously procrastinating, which because it's upon us. So the other thing is there'd be a number of people who are trying to stay on chain with ETH in their wallets to try to get an Ethereum fork after the merge. Okay, because there is going to be the proof of work fork. Let's see here. ETH, what is it called? So let's see here. So yeah, the Ethereum proof of work fork. I mean, there's some people who are going to try to get this, right? I mean, I'm definitely not. I'm not really betting on this being long-term viable. Okay, we've seen lots of things that have been major red flags for this project. Okay, the IOU currently is doing pretty terrible in terms of price action. So, but there will be some people who are trying to like hold their ETH in their wallets on chain to try to get some of that on the fork. The problem is, I mean, how are you going to cash out of it? Of course, there's going to be some exchanges that support the fork, okay, and that's going to be your kind of go-to liquidity source. But a lot of the DeFi projects, I wouldn't count on them working properly. So if you want to swap to a stable coin, like what are you going to do with the stable coin? It's you can't guarantee that the issue is actually going to back it, and if they did, like they might require you to burn your coins in a different chain in order to get them over there. So Robert thinks the merge pump already happened. Yeah, that's what I was saying. It very well could have already happened, especially with, this price action sort of on a 9-day time frame. We were talking about this basically after this sort of corrected. It's like, yeah, that could have been the merge pump, and it may very well could have been the case. Basically, a month before. Surprise, surprise. Because I mean, people in like traders aren't stupid in crypto. Well. A lot of traders are stupid, but like really good traders aren't stupid. And so they're going to front run people who are trying to front run somebody else. What's the next big milestone after the merge? So in terms of the Ethereum roadmap, that's going to be sharding. I try to pronounce that very clearly because sometimes people mishear that for a different term. Let's just look at here. Let's look at the Ethereum roadmap here. So you can check this out over ethereum.org/upgrades. Okay. So they don't really call it ETH2 anymore. Let me see here. They used to have a pretty good looking timeline. Let me just find it. So the beacon chain, that's live. Of course, that's what's going to get merged tomorrow into the main chain. Let's see if we can go to the next thing here. I feel like they changed the user experience in this, and I can't find like the next tab. Anyways, beacon chain, the merge and end of mining, setting up for sharding. Okay. I thought there was supposed to be like a next tab. Okay, the merge and then shard. Okay, here you go. So the beacon chain, the merge, and then sharding. So estimated in 2023, sometime in 2023. So it's a big catalyst for next year. All right. So what is sharding? It's a process of splitting. So basically, sharding is breaking up like the blockchain into smaller blockchains that all, kind of are controlled by the same big blockchain. So if you've ever done any other type of development before and you've worked with like a centralized database, like a SQL database, and let's say you start your database starts getting really big, okay, or you have a separation of concerns, a clear separation of concerns in that database, and it starts to grow, or you anticipate it to grow, you can basically break it up into shards, which is basically a database of databases. It's basically having multiple like things that don't necessarily need to have all the features of the same database talking to one another, but you could break up these logical groups of shards, okay, to increase the performance whenever the data gets really big. And so that's what you're doing with the blockchain, is basically whenever, to scale Ethereum, there's different strategies for doing this, but you're talking about, all the transactions history on Ethereum is getting quite big. That's called the state, or the public ledger. So, it's like whenever you send transactions around, you create those transactions and you put them into, they get bundles of records. They get grouped together into bundles of records called blocks, which are chained together to make the blockchain. And, over time, like that ledger, that blockchain gets really big. Okay. And that's one of the reasons that Ethereum becomes slow and, expensive, is because the hardware requirements. That's not necessarily why, but basically that thing starts becoming unwieldy. It starts becoming big and is a bottleneck for scaling. So one thing you can do is basically say, okay, well, let's break this thing up into shards. Let's break the chain into shards, so not everybody has to do everything. Okay. And then we can have sort of something that orchestrates all these shards working together, all right? And then that can essentially help increase the performance of the blockchain itself. So that's what the big thing is after the merge, okay? And then also, that's gonna have a pretty big implication on scaling, because spoiler alert, if you're anticipating the merge to fix Ethereum's gas fees, that's not what's going to happen. Okay, so that doesn't have to happen. Like that's what layer 2 scalings are for. Layer 2 scaling solutions are for. It's where you have this separate environment that works kind of like a blockchain, and then that piggybacks off the security of the Ethereum blockchain itself. Okay, but with sharding, so rollups can already, layer 2s can already make Ethereum much faster. But guess what? They're going to have a big performance benefit with sharding, because they're going to have some unique infrastructure dedicated to layer 2s to help them scale. And basically, if sharding increases the throughput of the blockchain itself, then that's going to multiply the throughput of rollups. So basically, let's say your rollup, just for simple math, right? Achieves 50x scale right now. Well, essentially, if you got an additional 2x on the base blockchain with sharding layer 1, then that takes your 50x and multiplies it by 2 to 100x. So then that becomes 100x scalability from what you originally had. So that's another reason to be super excited about sharding itself, and that's the main big item on the roadmap after ETH 2.0, or I should say, the merge or proof of stake getting turned on. Now, that being said, there is some smaller stuff that's going to happen in between now and then. There's the post-merge cleanup period, because many people fear ETH stakers just taking all their ETH out of their, out of staking and then just dumping it after the merge because it's been locked up since December 2020. If you started staking then, or just sometime in between then and now. because, the staking has not been liquid. Essentially, you had to deposit it on the beacon chain, and you can't get your money off the beacon chain until after the merge. But that's not going to happen immediately. Okay. There's probably going to be a period of, I don't know, say 6 months, 3 to 6 months, something like that. I mean, we don't know for sure, but many months where it's still not going to get unlocked. And even if it does, like, there's going to be withdrawal queue. It's not like everybody's just going to be able to take it out in the same day. So there will be a period of time where no new ETH is entering into circulation after the merge. Okay. So that's another thing to think about in terms of the price. Let's hope the ETH merge event goes success and we all become a millionaire and billionaires. That's what Kumar says here. So Fausto says, at 16 years of experience, I went to work as a blockchain solidity developer. I'm studying your free courses. Do I think I'm on the right track? Do you have any advice for me? Yeah, definitely. Definitely keep on that. Now, eventually you're going to want something probably a little more advanced than that. That's definitely what we teach you inside the blockchain bootcamp. I'll put a link to that at the end of the show here. But once you kind of are able to create that professional level project, what you want to do is, code something for yourself to where you're like, not just following the tutorial, but you're, kind of bumping into walls and trying to create something for yourself from scratch. Of course, that's how you get the functional skills. And then just build your own project and put it out there. And if you're trying to become a Solidity developer in the actual industry, you just show people that you can do it, right? So building your own project like a, DeFi app or something, that's like what we show you how to create, that you made yourself and put out there and open source code in GitHub, just put it on a test network so that other people can use it. That's going to be the biggest thing. That's the next step for you for sure. So anyways, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps the videos out so the more people can learn about blockchain. And if you want to do exactly what Fausto is talking about here, trying to become a real-world blockchain developer, you can definitely do exactly what he's doing. You go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And definitely the next step after that, or the biggest shortcut if you want to just go for the throat, is to head on over to dappuniversity.com/bootcamp. Okay. You don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.